What if the worst looking chart in your portfolio is quietly hiding the strongest fundamentals in the entire sector? Bittensor just dropped 28% in a single week. Price sits near $200, pinned to the lower half of a channel that's been bleeding since 2024. Everything on screen screams weakness. Yet this network just shipped the loudest proof of real demand we've seen all year. So one of them is lying to you. The price or the product? Today, we find out which. Here's where the noise gets dangerous. Sentiment on Bittensor is fragile, and most people react to the candle instead of the catalysts. But this video matters for one reason. We just got a wave of fundamental news that doesn't match the price action. That gap between what a network is building and what its token is doing is where serious position traders make their money. So before we touch a single moving average, let me show you what's happening under the hood. Once you see it, this chart stops looking like fear and starts looking like opportunity. Let's start with the thing nobody expected. Bittensor now has a physical product. Targon announced the Tower Pro, a confidential AI computer for your home, packing up to 8 GPUs, NVIDIA confidential chips, and Intel secure processors. The pitch is ownership. You run it locally, then switch on an earning mode that monetizes the machine when it sits idle. They turned spare compute into a yield source, or let me say, a demand sink for the entire network. And demand needs something to feed. That's where the training breakthroughs come in. On Subnet 9, the team behind IOTA just completed Orion, a 100 billion parameter model trained over the open internet across scattered global hardware. It hit 65% of the training speed of a real data center at a fraction of the cost. To put that in human terms, one founder orchestrated a 128-node training run in 5 minutes for 5 TAO, roughly $1,150. Subnet 3 is doing the same with a fresh 10 billion parameter architecture built for long memory and reasoning. Mining one of these subnets is fast becoming the real benchmark for machine intelligence. Now connect the dots. A co-founder made the case on stage that Bitcoin's network already dwarfs the top 100 supercomputers by 600,000 times, and that the same incentive engine can point straight at artificial intelligence. And Kant's thesis, founder, is that the real value isn't software anymore, because software moats are vanishing. The value is the underlying commodity, the raw intelligence, and Bittensor is built to capture it, coordinate it, and resell it. He even pointed at rival networks renting compute from Bittensor providers like Targon, calling it symbiotic, not competition. Here's the part that should make you sit up. The money is flowing back into the token. One platform, Shoots, now earns around $280,000 for every trillion tokens it processes, up from almost nothing a year ago. And its profits go straight into buying and staking TAO. That's a network beginning to pay for itself. Add institutional rails forming through new DeFi workshops for subnet owners, and you've got the early plumbing for real capital. So why is price still on the floor? 2 reasons. First, a governance change. The chain will now reclaim its own buybacks when a subnet shuts down, and a loud part of the community called it theft, threatening to walk. The founder pushed back, saying tokens the chain bought belong to the chain. That fight is the real source of the recent fear. Second, the staking data. Around 2/3 of all TAO is locked up, but capital is rotating out of the safe base layer, from nearly 100% down to about 75%, into riskier subnet bets. Internally, that's risk on. Externally, it looks like weakness. And here's a positive angle most people miss. Those triple-digit returns on TAO liquidity pools, between 171% and 246%, are some of the strongest real yields in the space right now for anyone already holding the asset. Now the chart, and we start wide. On the weekly, TAO has been trapped inside a descending channel since 2024. The orange dotted lines are the boundaries, and the middle of that channel matters most. It acts like a magnet. Lose it, and price falls toward the lower edge. Reclaim it, and the doors open back up. Right now, we've lost it. Price closing back below the mid-channel and below both the 55 and 100 period moving averages, those purple and yellow lines. That's a market structure that favors sellers. On top of that, 2 falling trend lines run from the October 2025 top. We broke the first back in March, which was bullish, but the second rejected us in April and May. So price is boxed in again, with that second trend line now the ceiling any new uptrend has to crack. For levels, I'm using a Fibonacci anchored from $305 in June up to $489 in October. The golden pocket, the 0618, sits at 365. Our last real floor was the 1618 extension at $227, and we just lost it. That's why we're now inside a demand zone between $185 and $210, with 185 as the line in the sand. Below that, the next magnets are $142 and $88. The momentum picture agrees. My Heikin-Ashi Relative Strength Index never reached overbought at the March high. It topped at the same level that capped the last three rallies, and each was followed by a deeper correction. That's a warning, not a death sentence. So here's my actual book. I accumulated around $160 in February, in that green box lower on the chart. Price then handed me two clean exits at 305 and 365, and I de-risked into both, keeping 50% of the position. The mid-channel became my invalidation level. A weekly close below it, which is forming now, tells me to trim another 20%, leaving me with 30%. That piece is already pure profit, so I let it ride as a long-term bag. My only real interest in adding again sits down in the green box, between $120 and $160. For anyone completely out of TAO, a careful entry here could still pay off toward a retest of that white trend line, around $260. If we do turn, the targets stack cleanly. 300, 360, 490, 700, 970, and $1,300. And I don't hold those naked, I trail my stop. First target hits, the stop moves to entry. Second hits, it moves to the first. Risk comes off with every step. So let's weigh it honestly. The bull case is a network with accelerating revenue, physical products, and the strongest distributed AI proof in the sector, trading near multi-year lows. The bear case is a token still leaking value while a governance fight chips at trust, structurally below every key average. Both are true at once. That's the whole story. In the short term, I lean cautious. Price is below the mid-channel, momentum is rolling over, and one more thing has to cooperate: Bitcoin. If Bitcoin loses its 200-week moving average, altcoins like this don't recover fast, no matter how good the news is. That's my macro filter. What flips my thesis? A weekly reclaim of that mid-channel and the 227 level, with Bitcoin stable. That's when the white trend line at 260 comes into play, and fundamentals finally pull price instead of the other way around. Now, let me bring it home. Bittensor's fundamentals got stronger while its chart got weaker, and that gap is the entire setup. I'm holding a long-term core, de-risking on a weekly close below my invalidation, and only reloading in the green box below. The chart, not my emotions, decides the rest. Here's the wisdom I've earned over almost 20 videos on this token. The market pays you for sitting through exactly this discomfort, when the story and the price disagree. If this helped you think more clearly, hit like and subscribe. It genuinely helps the channel. And if you want to see my exact execution, not the summary, it lives inside the Pro Capital Vault, my private community for serious position traders. You get my real-time portfolio, the precise buy and sell zones, weekly live strategy calls, the Sunday prep report, and direct access to me. Join through the button under this video, the link in the pinned comment, or scan the code on screen. Once you're in, just sync your YouTube account to Discord, and every private channel unlocks. Think of it as working beside me, not behind me. Now I want to hear from you. Are you de-risking here, or accumulating into the green box? Tell me in the comments, and why. And if you missed it, watch my last Bittensor video, where I broke down the exact governance drama that triggered this correction. None of this is financial advice. It's my framework and my own money on the line. Let the chart decide, and I'll see you in the next one.